Welcome everyone to the Kendall Report, and it is Tuesday night. Sorry for the late start. Had about every problem you could have with the computer in the last hour, so it's been very interesting getting ready tonight, so apologize for being a little late. Anyway, what I am looking at right now is the markets are rebounding after this disappointing news from Google, and they just crushed the markets when that came out. Right after the cash close, the market just collapsed. It was crazy. It's almost like 35 handles. So we're seeing a bit of a rebound. You can see the chart up in the far right-hand corner. That's the S&P. That is a 5-minute chart. So it has rebounded pretty substantially from there. We look back at yesterday. I mean, it was really nothing going on from a news standpoint. It was really, we had FHA housing comes out -7. Case-Shiller came in at 13.3 instead of 14. All of these housing, I'm going to tell you, we're in an absolute housing collapse at the moment. And then we saw consumer confidence come in at 102.50. It was expected at 105. So everything's starting to kind of look a little shaky here, to say the least. And, you know, we come into Wednesday, we got mortgage apps, more real estate. They came in -4.5. Last week, housing, new home sales are expected to come in at 675. Last month they were at 688. That's a big collapse in price. That's getting on about 15+%. If this keeps up, I talked to you about this stuff before, but there's going to be some amazing bargains in the new home market. So if you're looking to do something, it might offset the extra interest that you're going to have to pay to get a mortgage. But the good news is maybe rates will come down eventually and you'll be able to refi again, and the refi market will come back and everybody will be happy in the end. We saw some really, the activity today was amazing. We just kept trading up. We almost hit an R3. We traded up toward these levels that I talked about last night, that you want to look for a rejection. And the interesting thing about the way the pattern's set up, especially with the collapse right after the close, it looks like we're going to maybe start this little sideways movement. There's some pretty good movement in the database, which was impressive. So I'll cover that here in just a few minutes. I don't have a lot of notes. S&P up 1.6, NAS up 2.25. Russell just killed it. It was up 2.73. 10 of the 11 sectors were up. Basically, you couldn't get any better until right at the close, right after the cash close and this news came out. They just crushed this thing. Okay, so I really don't have a lot as we set up for Wednesday, but I do think we're going to consolidate here for a few days. Let's go ahead and get into the rest of the broadcast. So some pretty decent traction. 2,161 new buys for tomorrow on the open, 120 sells. Database is moving up to 31.34% bullish. So we're starting to get some really nice traction here. And in spite of the sloppiness that we're trading overnight and after the close, you'll see here in the technicals here in just a few minutes that it looks like we've got some consolidation coming, and we could see more stocks start to come on. It's interesting to look at the overall view here from the standpoint of the sectors. The consumer non-cyclical now is soaring. It's up 6% in the last 10 days. We've got conglomerates up 3.6. We've got transportation up 5, up 8% on energy, continue to get traction there. And all of these sector trades here are very early on in the trade sequence that's there. And really what we're looking at from the standpoint of the patterns here is that the material rotation that we're getting is starting to get really serious here, because right now we are looking at, of all of the sectors right now, we have 10 of the 12 sectors long. We actually have a new buy for consumer cyclical coming in. So that's where it's 10. The only flat what we have right now is services and technology. And so on the short term, these sectors are really starting to roll. I mentioned this a number of weeks ago, and I said when these started to rotate in, you want to look into these sectors, and there was a lot of opportunities in a number of these. There's some big movers in these sectors that we're looking at. We'll start here with the S&P, and we are seeing a red bar for the first time in a number of days. We look at the market grid, S1 is 46. We've actually traded down to 24. So we printed S2 already. So we may have seen the worst of today overnight here. We are looking at the potential to come back toward the 40 period moving average now, which is at the 37.98 level. And I talked about getting above here. We did that. We traded, like I said, almost to S3 yesterday and then got rejected. If you look at the algos, they're starting to get tired here, but they're still suggesting for the next several days that the 10 period moving average is going to continue to climb up here. So we're going to look at around roughly the 37, looking at the grid down around 37.90. The extreme is 37.69 on the STX today. That as we come down in those levels, that's going to be the point where there's going to be major support here. So the indexes are definitely tired and probably peaked out here. We got three days up, and we've been getting this. It's a weird pattern of 323, which is interesting, but with these higher PPMs coming in, we're looking at right now, PPM 1 is at a plus 0.66, PPM 2, 0.22. And I was telling you just a couple of days ago, this is what the algos were projecting. Now they're projecting that this is going to stay in the trend mode. And so we'll have to watch how the ranges trade around these moving averages as we come back in a little bit here. Like I said, the extreme probably 37.90 to 37.70 is going to be the bottom end of this range here. But we should stay in a sideways range, and we're going to find out probably in the next couple of days whether they're going to be able to maintain this trend or not. I think we get into a choppy range. We got way too far too fast, and I think maybe Google woke up everyone today. So we'll see how this all sets up as we come forward. I did look at, I'm going to bring this up here. This chart here is the hourly chart. The hourly is suggesting that we're still going to have some downward movement, and in fact, it's suggesting that the market's going to roll over. So it's easily, I've got my cursor right now, right at that 37.80 level. So that would be a retest of this last low here. So things are definitely looking heavy here. So look for some choppy markets here for a couple of days, at least for today. We have, like I said, we don't have any material news or anything coming out at all that is likely to affect anything. Next, we'll cover the NASDAQ, and the NASDAQ is really interesting. Big gap down. We're down 1.9% right now, so big gap lower. All of a sudden, all the air came out of the balloon, and we're trading back toward this 10-period moving average. And just like with the S&P, we still have some upward bias here, but it looks like at least a couple days of sideways in here, and we should support around the 10-period moving average. PPM 1 is up at 0.58, and if we look at the average right now, it is going up at about 70 handles per day. So right now it's at 11,242. Last trade right now, 11,491. So we should support down there. But if we look at the market grid on the NASDAQ is much more drastic. We had a low of 11,436, and we're looking at S3 low already overnight. I do expect this to stabilize here. You can see the algos are suggesting that we're going to see a little bit of an uptick, but more likely what we're going to get into is in a trading range, and we're going to get sandwiched between, this is the same thing on both the S&P and the NASDAQ, as we're going to get sandwiched between probably the 40 and the 10-period moving averages. That's the most likely place that we're going to stay in those ranges. So use those simple averages as guidelines to trade around. And if you're owning stocks in here, I still think there's a lot of traction coming in. Like I said, our database is up to 31.34%. So that is still looking very, very good there. Next, we'll take a look at the Russell futures. They're not, it's interesting. Russell's hanging in there pretty good. It was the strongest yesterday, and right now it is flat on the session, so it's not getting the same type of action. Looks like all of the action is in this large cap sector in the technology, and that's also obviously affecting the S&P, and because there's a lot of those stocks in that index as well. None of those stocks are in the Russell, so therefore we're seeing some relative strength here, pretty good. But even with the Russell over the next couple of days, like I said, what I'm expecting here is really just a trading range that is going to set up. I'm going to just draw in. We're going to have a trading range right here on this. Right. Let me move this down a little bit. Let me use another tool here to draw this in. But really, the trading range is likely going to be in this range here, but above in the market grid, and we should see something like this. And the same thing on the S&P and the NASDAQ as far as that goes. Next, we'll take a look at the treasuries. Treasuries came all the way down. We tested that 10-period moving average. I talked about that a little bit. Let me just bring up the pop-up window here so you can see this. The 10 was at 407.90. We went, the low was 405.20, and we went out just above that at 410.80 on the close. And if you notice, the absolute just crushed the PPMs. Now they're still in trend mode, but we're really looking, this was just short of getting STX buy signal. We really are just looking at the trend starting to roll over. We could roll down as far as, I don't expect it at the moment, but over the next several days, we could see 4%, 4%. So the bonds have caught a bid finally. There hasn't been a bid there for a while, and that's really set up an interesting pattern here. What is interesting is the dollar is still printing higher numbers, so it's not affecting the dollar, at least at the moment. But this is a fairly negative look here. I'm just going to flip over to a weekly chart so you can see some of the patterns that are set up here. And what we're seeing is what I was talking about last week and coming into this. We have this, let me change this just a little bit here. We have what I call a box formation on the market grid. And when that happens, we tend to stay within those ranges. So we're looking at the high so far has been 429 high. We had 429.3 was R1. We had 429.1 as an actual print high. On the downside, S1 is 413. And this is where I came up with this 404, 405 number. S2 is 405. And the 10-period moving average on the daily is actually down at the 395, and S3 on weekly is at 395. My expectation is that we'll hold S2. We've already printed R1, so we're most likely are just working on the downside right now. And in spite of that, I think that will help to stabilize and keep the equity markets into this sideways range that I was talking about just a minute ago. Next, we'll take a look. This is weekly crude oil. We're just really in a sideways range here. I've been talking about it. It gets kind of boring, but this pattern, this is the weekly charts, still have a negative overhead push here at right at where we're trading right now, 84, but the big resistance, basically 92, I've been rounding off, 91.50. On the downside, we're looking at so far the week, we've had an 82.63 low, 82.94 is S1. So far, we're printing in between R1, S1, and it's hard. There's no, let me go to the daily so we can see exactly what the potential is if there's a bias here. The bias is slightly to the long side. I've talked about some of these objectives coming in over here at 98. Not sure those are really in play at the moment. I want to go over to the algos real quick here, 1 second, and bring that up. And the algos are suggesting that we're going to go sideways for a few days, but there's some downside, and I think this is coming from where the weekly charts are coming in. Let me just bring up the weeklies. Yeah, so weekly staying stable to slightly up, so that's why we're likely to stay inside of this formation here, which is setting up the range I just talked about, 92, 82, 95. There's a potential for an 80 handle, 80 even handle, but really we're just locked in this range. And it looks to me that the sideways is going to be probably in a range that I've been talking about will be the most likely scenario going forward there. So this is the weekly gold. Gold continues to basically hang in this range. We've got an inside bar. The 10-period moving average is at 1688. Major resistance at that level. Probabilities of getting above that at the moment aren't very high. But I brought this up because the algos are suggesting over the next couple of weeks we're going to see the downside momentum start to dissipate, and it'll take about 3 or 4 weeks, so we get more consolidation go here. As long as we can hold 1622, 1618 range and stay sideways here, we're going to see some flattening out and see the market start to at least challenge the 10-period moving average, and this is weekly that we're looking at. So right now it is dropping at about $16 per week. It's currently at $16.88, so all of a sudden we're $16.62, and there's going to be a lot of pressure. But if we do see this start to turn up, the PPM1 start to cut through its first, second derivative, that will suggest that we're going to stabilize in here and potentially get back up to the 200, maybe the 21-week, 200-period week moving average up around 1720, 1740. But we're a long ways away from that. There's plenty of work to do in that area. Next, we'll take a look at Bitcoin. Bitcoin's continuing to try to stabilize here. This is weekly again. We're trading right into some resistance right now. 19.77, I'll get the numbers right. 19.716 is the support that's coming in here. We're trading above this 10-period moving average. That's what that value is. We're trading currently at 20.203. And it looks to me that we're going to continue to dissipate from the standpoint of the models, and we're potentially going to challenge this 21,000 level. Above that, all of a sudden it gets very interesting, because the next level of resistance doesn't come into around 22 to 23 handle, and ultimately way up at 26,000 is where the market goes. There's so many, this is almost like what we've been talking about for a while with the markets and the equities. It's almost impossible not to find somebody that's not negative on Bitcoin. There are some that are bullish, but it looks to me that there is definite positive cycle starting. We had a cycle hit about 4 weeks ago, and we just continue. I've talked about this multiple times about all of the configuration from the standpoint of what's going on with the moving averages and how they're setting up and starting to look like we're going to go positive. Okay, folks, this is going to do the video for tonight. Once again, sorry for getting a late start. Just had a interesting technology day. I can't figure out who to blame. Maybe Windows 11. So Microsoft had good earnings, so they've certainly still making some money here. Yeah, so just thanks again for watching. Make sure you hit the like button, and we will and subscribe, and we'll see you tomorrow night. Those of you in the live room, we'll see you there at 1 o'clock tomorrow Eastern time. Thanks a lot. Talk to you then.